Welcome, 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 ladies and gentlemen. Welcome. It's been a few days. It's been a few days, but we are to the midweek. But as we like to say in the Carolinas. But welcome everybody. Welcome to the midweek fundamentals. I'm your main man, Mr. Levels, aka Pips, aka Hop, aka Sup there. You know. Before we jump into the technical analysis, let me give a quick disclaimer. This is not financial advice. Anything that I share throughout this analysis is for educational purposes only. I repeat, this is in no way financial advice. Any and everything that I share throughout this analysis is for educational purposes only. Cool beans? Cool beans. Let's jump into it. Starting out with the dollar index, aka Dixie. As always, I told you guys in our last session that I was looking for um, the dollar index to stay below consequent encroachment of this daily fair value gap, which is now an inverted fair value gap, right? Because this was the original gap. Price came back down through it, making it an inverted fair value gap, right? And it's a rather strong fair value gap because it's on a higher time frame, such as the dollar, the weekly, or the monthly, right? So the dollar and above are very powerful levels, right? When we're talking about time frames. And so being that this is a dollar fair value gap, or rather inverted fair value gap, it's a very powerful level. And I told you guys that I wanted to see, and I told you guys that I wanted to see if price could hold below the consequent encroachment of this daily fair value gap, or if we broke and closed below the consequent encroachment of the daily fair value gap. So this week we
Oh, I need your card.
please.
You know what? It might be locked. I think it is. You know what? Use this one. Because I think it is locked.
All right, my bad, guys. I had to mute somebody. Yeah. Um, I told you guys that I wanted to see us hold below the consequent encroachment, which is this yellow line of the daily fair value gap, inverted fair value gap, and I wanted to see us push lower, right? We've been bullshitting around, consolidating, should I say, around this lower range, or lower level of the lower range of this daily inverted fair value gap, meaning the yellow line to the lower level, right? This range right here. And we've just been consolidated for the last 2 weeks. Well, today with the news that we had come out, the high impacting news, um, which if you give me a second, I'll tell you exactly what it was. Today we had Chicago PMI come out. We had employment cost index. We also had pending home sales. We had the federal fund rate, which stayed the same. And then we had the FOMC statement, right? So with that high impacted news, with those high impacting news drivers that we had come out today, we seen that the dollar sold off quite aggressive, right? Now, with that, I like that. I like the way that looks. So what I would be expecting, right, since Thursdays are typically what? Pullback days. I'll be expecting Dixie to give us a pullback up into Thursday's premium price levels, which you see I have marked here. 62 and the 79% Fibonacci levels are your premium price levels for today's price action, right? And with tomorrow being typically being a pullback day, I'm expecting the dollar to pull back up into those levels, right? So with that being said, we could see price just melt and sell off or fall like a falling knife to run through the previous month sell side liquidity, right? Which I just added these new monthly levels on here, right? Because we know today is the last day of July. We are entering into the month of August tomorrow. So I put new monthly levels on here, right? And this monthly sell side liquidity is our previous month, which is technically the month we're still in, July, but tomorrow it'll be the previous month's sell side liquidity, right? And what I was saying is that we could see Dixie just go ahead and melt or fall like a falling knife through the monthly sell side liquidity, right? But I am anticipating a pullback back up into today's premium price level, right? Which would be around 104.3, 104.2. Cool beans, right here. Cool beans. Cool beans. So with that said, let's move on to currencies. Now I haven't had a time to put my new markings, my new monthly markings on currencies yet. I'll be doing that after the call. You guys can do that in your own spare time. I've shown you and taught you how to put your daily, weekly, and monthly levels on your chart. So if you don't know how to do that, then that's your own fault. So with that being said, looking at Euro USD, being that I'm expecting the dollar to sell off and go lower, I am expecting currencies to push higher. Right? I do want to see Euro USD push back up to run monthly buy side liquidity, right? But first, it would have to get back above this daily inverted fair value gap that we're below now. I would like to see us break up above it, right? And if I was trading currency, I would not take a buy, right? If I did take a buy, I would either take the buy right now, right? Stop loss below this swing low, below the previous low, right? Or I will wait until we break above the daily inverted fair value gap and take the buy off of that upper level, off of the upper level of that fair value gap. Cool beans? Cool beans. Now, we do have high impacting news coming out tomorrow and Friday, the last 2 days of the week. So we don't know how that's going to affect the market, right? That high impacting news could very well push Euro USD down into this imbalance, right? And then we could see Euro USD go higher from there, right? And if Euro USD does sell off and come down into this imbalance, I don't see it coming down here without cleaning up this um this imbalance here. This I'm trying to think of the proper term. Volume imbalance right here. Right? See the wicks meeting each other, but you don't see a body, right? Going through this imbalance right here. We don't see any clean bodies in this area. We only see wicks. That is what Michael Huddleston calls a volume imbalance. Now, a liquidity void would be where there's nothing there, no body, nor wicks. All right, see if I can find the liquidity void. Can't find one now, but you guys know what a liquidity void look like. It's just a gap with no price. So volume imbalance here. So I don't see price selling off down into this imbalance without cleaning up this volume imbalance. Right? Cool beans, cool beans. But my bias is on the bullish side. I would like to see us continue higher. I'm looking at this as just a pullback, a correction out of this up move here, right? This up move gave us this correction. I'm looking for us to sell higher. But like I said, with the high impacting news drivers that we have the last 2 days of the week, those could be enough to push us down into this daily imbalance, right? In this volume imbalance that we see here. Cool beans, cool beans. And that's pretty much the same across the board with currencies. I would like to see the pound go higher from where it's currently at, as well as NZDUSD. I told you guys that I wanted to see NZDUSD come down into this daily imbalance here. We got that here, right? Now I expect to see NZDUSD continue higher from here. I would like to see us come all the way back up and take out this swing high, right? Monthly buy side liquidity, whatever you want to call it, to continue higher. Cool beans. So yeah, we could see us pull back because Thursdays typically tend to be pullback days. So we could see price for today or tomorrow pull back, right? And if I'm confusing you saying today or tomorrow, I'm saying because it's Wednesday now as I'm speaking to you, but looking at your daily chart, the daily candle for Thursday has already opened. That's because the new trading day technically begins in Asian markets because it's Thursday in China now, right? So their markets begin the new trading day, right? So that's why you will see this candle here says Thursday, August the 1st, is because it's already Thursday, August the 1st in China for the opening of the Asian market. Cool beans, cool beans. So, with that being said, we could see a pullback for Thursday's trading day down into today's discount levels, right? Which I hadn't added to my chart yet, but you know your discount levels would be somewhere up in here. Your 62 and 79% Fibonacci levels on this bullish candle, right? And if we're anticipating a pullback, we're anticipating price to pull back down into those discounted levels so we can buy for price to continue higher. Understood? Cool beans, cool beans. So that is what I'm anticipating. I'm anticipating price to pull back. That's the only way I would buy NZD if I was a currency trader. I would only buy off of those levels, right? Or I would mark up this. Sorry, I'll mark up that fair value gap, which is now an inverted fair value gap, right? Because price came back up to it, pushed through it, broke above it, closed above it, and now we're on top of it. So now this is no longer a regular fair value gap. It's an inverted fair value gap. The price has pushed through it and closed above it, right? So yeah, I would only take a buy off the top level, consequent encroachment, or the lower level if I was looking to buy NZDUSD, or I would be waiting for price to pull back down into the discounted levels of this candle here. Cool beans, cool beans. So those are your two options if you're looking to buy this market. You know, yeah, simple as that. So with that being said, let's look at our future pairs to close it out. Looking at ES, I am anticipate ES to pull back down like NZD USD, right? Up down into the discount levels from today's price action. this candle here, right? Now, I do see these monthly PD array levels that we just pushed through. Now, these monthly PD array levels are up to date. I did put my, because I always add my monthly levels to my futures charts first before any other charts, because those are the pairs that I trade. I trade futures, I don't trade currency. So currencies are always last when it comes to adding my levels to my chart, right? So being that we just pushed through these monthly PD array levels, right? We could see ES pull back down to the monthly PD array level, 62.79% levels, and just rocket like slingshot off of those levels, right? We don't have to see ES pull all the way back down into the daily discount levels from today's price action, right? Now we could get that pullback, right? But we could very well just see ES pull back down to the monthly PD array level. Or we could see ES not pull back at all and just take off like a rocket back up to run the monthly buy side liquidity and create a new all-time high for ES, right? All of those are viable options when it comes to ES in its current state, right? So what I do is I stick to my rules. I set my levels that I'm only willing to take sales or buys off of. And if I'm going to buy ES, I'm only going to buy ES off of these monthly levels or these daily levels, right? Which are discount levels, right? For the daily levels, discount levels. Monthly levels are premium monthly levels that we just broke through that we can use as inverted levels in case price pull back down to them, just like the inverted fair value gap, right? Because levels never lose their relevancy, right? They're always relevant. It just depends on what relevancy they hold. And for these monthly PD array levels, they would be inverted PD array levels that I would be using to buy the market off of if price pull back to me, right? So let's say, for instance, I wanted to buy ES. I will wait for price to pull back down to this 62% level, right? And hold on, let me see something. I think I got my levels backwards. Oh no, they right. Okay. Yeah. So I would either wait for price to pull down to this 62% level, right? For ES. And what I would do is I will put my stop loss about 8 handles um below the 79% monthly PD array, right? So that would be about that'll be about a $400 stop loss, right? And I will play that. And I would play that back up to this high. Wednesday's high. All right, Wednesday's buy side liquidity. So I will wait for that pullback and wait for price and enter off of this level, stop loss below the lower level. And my target would be the buy side liquidity. And I'll be up out of there. It would be a nice play of about 40 handles, right? Which would be 5, 10, which would be $2,000. So I will be risking about $450 on this trade for a profit of $2,000. Well within our 1 to 3 risk to reward ratio rule that me and my traders like to try to stick to, right? 1 to 3 risk to reward ratio. So That's how I would play ES. Now, if I got stopped out on that, I would not take another buy until price came down into these daily PD array levels. It would be the same thing. I would take a buy off of the 62% level, and I will put my stop loss either below consequent encroachment, meaning the 50% area of these two markings, or below this level, right? And I will play it like that. Or if I wanted to be real conservative, right, I will wait for price to pull all the way back down to the 79%, right? And then I will put my stop loss below the low of Wednesday's price, right? Below, right there. So I would probably take this buy first because my stop loss will only be about 10 to 22 handles versus entering right here, putting my stop loss below that low and my stop loss being almost 30 handles. Make sense? Cool beans. So that's pretty much my analysis for futures across the board with EQ2, right? I'm just waiting to see how price reacts to this area that we're currently in for ES, which is this volume imbalance, right? Right? So I want to see us break and close above it in order for me to take a buy off the upper level of that volume imbalance up to run monthly buy side liquidity, or I'm going to wait for a pullback to these levels to take money, right? And if I get stopped out on these levels, right, then I would like if I got stopped out here, price broke and closed aggressively below these monthly PD array levels, I would short these PD array levels down to these PD array levels, which I would then take my profits here and then take a buy back up. Make sense? Cool bean. And the same thing with NQ, right? I want to see how price react to the current levels that we're at, these PD array levels that we at. I want to see if price going to rip through these PD array levels, right, to close in this volume imbalance, right, and close above these levels. Then I will be interested in longing or taking buys up to the month or up into this imbalance first, right? See how price does when it gets there. And if we break and close above that, I'll take it on up to this monthly buy side liquidity level, right, and take my profit there, right. Now, if we cannot break and close above these levels, right, and price shows resistance here, then I will look to short down to the daily PD array levels where I will be taking profit at and getting into buy positions to long back up. Make sense? Cool beans. So that'll pretty much conclude the technical analysis. Um, as always, I appreciate you guys taking, time out your precious days to come in, sit through these classes and educate, learn, empower yourselves. Um, if these analysis add any value to you guys' life whatsoever, please feel free to like, share, and most of all, subscribe to the YouTube channel. We're almost at 1,000 subscribers. We only need about 300 more subscribers to hit 1,000 subscribers. So, guys, I ask you to please share across your social medias with family and friends and whatnot. Help me get to 1,000 subscribers. So with that being said, as always, like I said, I appreciate you guys coming out tonight, tuning in, getting this knowledge and empowering yourself. Let your family and friends know you love them while they still here, please. And as always, peace and love. You know